Well, hi again everyone. I just wanted to make another video, and I always say that my videos will be quick and then they end up going for perhaps more than an hour. So I won't say will be a quick video, but I wanted to make another video following on from my Lessons in Lawfulness video late last week, which addressed the Lessons in Lawfulness report, which was published last Wednesday by the Commonwealth Ombudsman. So if you haven't seen that video, I'll try and put a link in this video now to that, and it should be appearing on the screen now potentially. And I will also just follow on from that video. I won't deal with any of the matters I've already dealt with there again. But one thing I said I would do in the last video, which I didn't, and which I'll do today, is discuss the technical reason why I think, and in my opinion, the Commonwealth Ombudsman has called income apportionment that took place before 7 December 2020 unlawful. And that is what the Commonwealth Ombudsman has said. Okay, but the best source of explanation or evidence for this claim in the Ombudsman's report appears in the appendix. So I'm just going to go down to the appendix of the report, and we'll have a quick read of what exactly the Ombudsman says when making this broad claim about the unlawfulness of income apportionment between the years 2003 and 2020. And I'll just interrupt the video here to comment that the following analysis is a provisional analysis only. And in the days subsequent to filming this video, I have discovered a range of other important factors that may influence the interpretation of this section. These include various AAT1 decisions that are extracted and published in the Royal Commission report into Robodebt, and they also include some legal texts on the Social Security Act, including that composed by Peter Sutherland and colleague, as well as some historical texts by Carney and Hanks. And I also note that there have also been internal opinions, including the Office of the Government Solicitor's opinion, which includes a reference to 1073B at the time that the December 2020 amendment was being made. And a final source of information about the interpretation of the section comes from the Amato submissions pursuant to the original Amato case that went to the federal court. So the following analysis doesn't take into account a range of sources of legal information that I've since discovered, and is a preliminary analysis only, and is not to be understood as a final view of the legal construction of the section, nor is it to really be viewed as legal advice. Strictly, it is an academic view on a provisional basis only. So the appendix explains that if a person is receiving a social security payment from Services Australia or Centrelink, they're required to report all of their income to Centrelink, all of their employment income to Centrelink. And that is correct. Over the years, legislation has expressed that obligation in different ways, and notoriously, at least for those in the area, whether not reporting income to Centrelink was a criminal offence or not was at issue in two cases that ended up in the High Court. The first is known as Poniatowska, where a person who had omitted to report all of their employment income to Centrelink appealed their debt and ultimately succeeded in the High Court in receiving a determination in support of their application. In other words, the High Court found that there was no obligation to report all employment income to Centrelink that would rise to the level of a criminal, an obligation sounding in criminal penalty. And then the following case in 2013-14 called Keating also dealt with this matter. But it seems that it is, whether it's a criminal offence or not, there is certainly a requirement that all recipients of Centrelink income report their employment income to Centrelink, so that Centrelink is able to calculate their entitlements in accordance with the broad means testing of Social Security that is envisioned or that is consistent with the objects of the Social Security Act and the regime that Act puts in train. So Social Security payments, it says here in the Ombudsman's report, are generally paid every 14 days. That's important, okay? There may be some Social Security payments that might be paid on a different time frame, but generally speaking, Social Security payments, as the Ombudsman report says, are paid every 14 days. Therefore, the period in which a Social Security payment is made relates to a period of 14 days. That period may be called the entitlement period, okay? And that's going to be important in the discussion that follows. Social Security entitlement periods are generally 14 days in length. And the Ombudsman report in this section calls those entitlement periods Centrelink fortnights. Centrelink fortnights, as you can imagine, are distinct and different to employer fortnights. I might call those payslip fortnights. So you might have a payslip fortnight and you might have a Centrelink fortnight. They are two separate things, okay? Now, you may also have a payslip month or a payslip week, but by and large, most people are paid, even casuals, on a fortnightly basis, and Centrelink periods of entitlement are also generally paid and determined on a fortnightly basis, meaning that you've got a payslip fortnight and a Centrelink fortnight. So earning and receiving employment income in a Centrelink fortnight affects and can reduce a customer's Centrelink payment rate for that fortnight. Which fortnight? The Centrelink fortnight, okay? Now, when you earn and receive income via employment, it might not align perfectly with the Centrelink fortnight. It might be slightly disaligned. And so for the overlap, the days that are both within the Centrelink fortnight and the payslip fortnight, those days are affected. They affect your entitlement to Centrelink or Social Security income insofar as they intrude on the maximum amount you can earn before that results in a diminution or a diminishment of Social Security entitlements for that Centrelink fortnight. Okay, pretty basic stuff, but I'm kind of being painful about it so that we just are totally clear on the distinction between a Centrelink fortnight and a payslip fortnight. To calculate a customer's Centrelink payment rate, the law requires that Centrelink determine a daily rate of employment income. Isn't that interesting? We're going to get to that in a minute. And we're going to see how the law requires that. But let's just take it on spec, or take it for granted on the advice of the Commonwealth Ombudsman, that to calculate a customer's Centrelink payment rate, the law requires Centrelink to determine a daily rate of employment income. Now, prior to 7 December 2020, Centrelink used a section of the Social Security Act, which I'll call 1073B. You probably want to call it 1073 capital B, but let's just say 1073B of the Social Security Act. It used this section to divide the total amount of employment income earned, derived, or received in a Centrelink fortnight by the number of days in the Centrelink fortnight. So they give an example. For example, if a customer earned a total of $210 in one Centrelink fortnight, Centrelink would then apportion this amount under Section 1073B to produce a daily rate of $210 divided by 14, which equals $15. Okay, so that is a very nice, tidy mathematical equation, but that explains what they did. And that was lawful. It is permitted by Section 1073B. Okay, so let's just put a bookmark in what the Ombudsman is saying here, and I'll introduce, even though it's a bit complicated, the section itself, 1073B, just so that we get our head around it as we're going through the different steps that Centrelink are permitted to take in order to calculate a person's entitlements. So I've pulled up the Social Security Act over here, and you can see that here's it's in the Federal Register of Legislation, and I've actually gone back to the version of the Social Security Act before the amendment of 2020 was introduced in December 2020. And so this is the November 2020 version of the Social Security Act. And we can see here, we've got the section 1073B that's described in the Ombudsman's report. So let's just go back and double check. The section we're dealing with is section 1073B of the Social Security Act. This is the section 1073B, okay? Now, the first thing to note before we even get into the text of this section is to look at where in the Act this section sits, okay? First of all, it's in volume 3. Now, the volumes of the Social Security Act don't have titles, and it's really, although they kind of are divided they're organized around different sections, the volume numbers are relatively random. They just kind of probably mark a point at which there's too much paper or too much volume in one section, and they move on to another volume just to spread out the Act so that when it's printed you can kind of put it in 3 piles. But within the volumes there are chapters, and the chapters have titles, and they give you a sense of where in the Act we are looking. So chapter 3 is the chapter that we're in, and in which 1073B appears, and that chapter is titled General Provisions Relating to Payability and Rates. So immediately we know we're in the part of the Act, in this chapter of the Act, that deals with general provisions relating to payability and rates. And we can see there's all these different subparts or parts underneath the chapter. So we go volume, chapter, part, and then division. Now, if we go down to where we are in the Act for 1073B, we can see that part is under, firstly, the part 3.10, general provisions relating to the ordinary income test. Okay, so it's within that part that 1073B appears. And so then we've got divisions under that part. Ordinary income concept, it introduced the idea of what a person's ordinary income is. Then it has another division relating to work bonuses, i.e. things that might be received by people on an annual basis or at other points in time. Then you have a division for employment income attribution rules, okay? And it's in this division 1AA, that 1073B appears. And that division's heading, as I said, is employment income attribution rules. So let's just for a moment think about what that means, employment income attribution rules. This division is clearly going to contain rules about how a person's employment income can be attributed to them. In other words, it's rules for determining the way in which Centrelink can attribute employment income to an individual. Put another way, they are rules regulating the way in which Centrelink is lawfully able to say, you earned this much money in relation to an individual. And it's in this division of the Act that 1073B appears. And notably, there's only 3 sections at this time in the Act that can be said to be the rules, okay? So here's the division 1AA, employment income attribution rules. The first rule is 1073A. That is employment income attribution over a period for Social Security pensioners. Immediately we know that these rules only apply to people on Social Security pensions, okay? And we're not dealing with that. And the Commonwealth Ombudsman doesn't mention 1073A in the report either. It only mentions 1073B. And we are not thinking about pensions as being affected by the unlawfulness problem that the Commonwealth Ombudsman report describes. So clearly 1073A is of no concern. 1073B is the section that we're concerned with here. And so what I've just done, introducing the part of the Act that it appears in, the chapter, the part, and the division, and so forth, is just give some legislative context, some context for the place in which this provision of law appears within the Act. So we know it's a rule that regulates the way Centrelink is able to lawfully say that a person earned income. So now it's really important that we now focus on the text of this rule. 1073B, the title of the rule is Daily Attribution of Employment Income. Daily attribution of employment income. Let's hold that in mind. We'll return to the Ombudsman's report and just remind ourselves that it says that Centrelink used the former section 1073B of the Social Security Act to divide the total amount of employment income earned, derived, or received in a Centrelink fortnight by the number of days in the Centrelink fortnight. Okay? It's explaining the rule by which Centrelink was able to attribute employment income to a person on a daily basis. Hence, the title of this rule is Daily Attribution of Employment Income. Okay. Now, like many other powers and rules within legislative enactments, you have a law expressed or a rule expressed in different parts. Sometimes these are called subsections, sometimes they are called sub-subsections, sometimes they are called limbs, like limbs of the body. They're limbs of a law. But we don't really need to worry about the anatomy of the law. Let's just follow the text and understand its meaning. It's a conditional opener to this legislative provision. It says if, colon, and we get conditions clearly. So firstly, 1, if. If A person is receiving a social security pension or a social security benefit, okay? All we're concerned with really for the moment is whether someone is receiving a social security benefit. Don't forget don't worry about pensions for the moment. So if a person is receiving a social security benefit, semicolon, and B, the person's rate of payment of the benefit or pension is worked out, is calculated with regard to the income test module of a rate calculator in this chapter, okay? So here this section is referring back to different income test modules that might appear in the same chapter. That's chapter 3. And we can see, without going into those income tests, we can see there's a seniors health card income test calculator, a healthcare card income test calculator. There's a benefit rate calculator B. There's rent assistance, which will presumably also have some kind of calculator, like under rate of rent assistance, etc. So 1073B subsection 1 sub B says if the person's rate of payment of the pension is worked out with regard to the income test module of a rate calculator in this chapter, okay, so if any of the payments that we deal with, youth allowance, Oz study, AB study, New Start allowance, etc., all of those payments will be worked out in relation to an income test module that appears also in this chapter 3 in volume 3 of the Social Security Act. So suppose that that is satisfied. So hypothetically, we have two limbs satisfied. If A, a person is receiving a social security pension or a social security benefit, tick, and B, if the person's rate of payment of the pension or benefit is worked out with regard to the income test module of a rate calculator in this chapter, tick, because it's youth allowance, it's New Start allowance, it's AB study, it's Oz study, tick. And D, the person earns, derives, or receives, comma, subclause, or is taken either by virtue of the operation of section 1073A, which was about pensioners, or any other provision of this act to earn, derive, or receive, end subclause, employment income during the whole or part of a particular instalment period of the person. Okay, now that subsection, which is subsection 1073B, subsection 1D, is a mouthful. It's a long sentence with a big subclause with multiple kind of successive options here in commas, earns, derives, or receives, and that's done twice, okay? So it's quite a complex bit of drafting, but let's break it down. It's a condition that leads into the final part of the provision. We've satisfied the first two conditions. It's the third condition. Funnily enough, it's, if you can believe it, drafted on this version of the text as A, B, and then D, and there's no C. So there may have been an amendment which removed C, because D is also referred to here. So it seems intentional, but it's unusual that you would see A, B, and then straight to D. But that's what it says. So let's not worry about a potential drafting error or some drafting infelicity. But in this subsection D, it says, we're trying to work out the meaning of it, and I'll be as clear as possible. And I've got more context for this too, to help us. Okay. So what it's basically saying is, if a person receives a social security pension or social security benefit, A, and the person's rate is calculated through a calculator in the chapter, B, and D, the person earns, derives, receives employment income during the whole of an installment period or part of an installment period. So all that's really saying is that if a person is receiving a social security benefit, and that benefit is calculated using one of the statutory tests, and while they're receiving that benefit, which is calculated using a test, they also receive employment income during the whole of that entitlement period or part of that entitlement period. So all that subsection 1D is saying is, as a condition of the operation of this section, a person earns, derives, or receives employment income, i.e. money from earning, employment, which is not part of their social security entitlement or not part of their social security money. That's all it is. So if we put it in absolute layman's terms, we could say, if a person is on welfare and the person's welfare is calculated using one of the statutory tests, i.e. its youth allowance, and the person works while receiving youth allowance and earns money into their bank account from that work. They're the three conditions, effectively. Okay? Having satisfied those, then we get to the guts of the provision. Then the person is taken to earn, derive, or receive on each day in that installment period that was referred to back up here, an amount of employment income worked out by dividing the total amount of the employment income, referred to in paragraph D, by the number of days in the period. Okay, so we've got a few variables here. The first is the total amount of employment income. Okay, what's the total amount of employment income? The Commonwealth Ombudsman has given us an example. In their example, if a customer earned a total of $210 in one Centrelink fortnight, that is the same as the total amount of employment income earned during an installment period. Okay, so that's our example that we'll use, $210. So the person is taken to earn, derive, or receive on each day in the installment period an amount of employment income worked out by dividing the total amount of employment income, $210, by the number of days in the period. That is the word there, period. Okay, it doesn't say, again, installment period. It just says in the period. But the period clearly refers back to the installment period, because there's no other reference to a period throughout the section so far. It says the person earns, derives, or receives or is taken to earn, derive, or receive employment income during the whole or part of a particular installment period. So it doesn't say whole or part as a period. The only period the whole thing refers to is installment period. The installment period refers to the period in which the installment of a social security benefit is paid, and therefore the installment period is the social security benefit period. So the employment income is income earned, derived, or received within the Centrelink installment period. Okay, and what this provision does is give you a statutory formula and instruction on what you do when you are attempting to get a daily attribution of income, a daily attribution of employment income. And the words of it are very important, because what it says is that the person is taken to earn, derive, or receive. In other words, there's a recognition in the text here that you're doing something artificial or fictional. The person, if they earn income, is taken to have earned, derived, or received it on each day in the instalment period, a separate amount of employment income, that's the daily rate, okay, worked out by dividing the total amount of income of the employment income, and that again is at $210 by the number of days in the period. Now, so we don't know what the number of days in the period, which I say must refer back to the instalment period. So maybe a keener drafter would have written instalment before that word period there. But there's just as much reason for a drafter to have omitted it for simplicity's sake, because it is inevitable that that has to mean instalment period, because it's the only period mentioned in this section up until that point. And that's my legal opinion. Okay, and I'm quite happy for that to be argued, but I don't think any arguments will overbear the plain reading of the word period as instalment period. I also think there is probably some rules of construction that assist a court or another kind of mind to come to the conclusion that period here refers to instalment period, but that may be something that's debated. Not that I think it should be, but it may be something that is debated as we speak, that we're unaware of. But as I'm saying, that word period is an elliptical expression, in my opinion, of instalment period in circumstances where you do not need to refer back to the instalment period, because it's clearly a resonance of the word instalment period or the expression instalment period used previously, where there's no other possible reference point for that word period to harken back to. So, what's interesting here is that the instalment period, whether it is written there or whether it's written here just as period, or whether it's written here, isn't given a numerical definition. So on the kind of application of this section, it's possible for an instalment period to take different durations. Okay, and that may be one of the complicating issues relating to what has happened in the history of the apportionment problem. Okay, but I won't go further with that at the moment. I will simply, for the moment, note that this provision, as it's explained in the Ombudsman's report, says that social security payments are generally paid every 14 days, which it calls a Centrelink fortnight. But if we were to use the words of the legislation itself, we would be calling the Centrelink fortnights instalment periods. And so if we turn that into a statement relevant to the actual legal provision, we can say that social security payments are generally paid in instalment periods of 14 days. Okay, so using that kind of heuristic, coming back now to the provision, we could kind of superimpose on instalment period the words 14 days or fortnight, just for our testing purposes. Employment income during the whole or a part of a Centrelink fortnight, or an entitlement fortnight, or an instalment fortnight, etc., etc. And as the Ombudsman confirms here, social security payments are generally paid every 14 days, meaning that the instalment period for a Centrelink payment is generally 14 days. So the legislation may as well have said 14 days. There may be exceptions, and that's why the legislation probably doesn't specify 14 days. But it may as well have done, because that's when most are paid. And for our purposes, and for the purposes of thinking about what constitutes unlawfulness, let's just say they're all 14 days. There may be exceptions, totally concede that. But let's just go with 14 days, because I think that's where the bulk of the problem lies. Okay? So now we know the provision pretty well, and I might come back to it. I'll just look at the subsection 2, which I think is of no moment, of no kind of effect. It says, if a person has reached pension age and is receiving a social security benefit, so I suppose pension age is 75, 77, something like that, it's going up. Subsection 1, which is the whole of that subsection with all of its internal limbs, does not apply to the person to the extent that it relates to that benefit. And so on my reading, none of that will apply to a person receiving a social security benefit who has reached pension age. And that makes sense because this rule seems to create a rule that means you can attribute to a person a daily rate of income. From a very interesting common sense perspective, pensioners don't receive income if they're receiving a pension generally. I mean, that's my understanding. You may be able to work a little bit when you're on a pension, or maybe not. I don't know. But it seems to me that they're very likely pensioners to be working a lot less. Maybe the attribution of income and the need to attribute income on a daily basis doesn't apply to them. But it also doesn't make sense just on that common sense basis. That's not really where I was going. It makes sense in the legislative context because 1073A is a provision preceding 1073B that allows Social Security pensioners' income to be taken to have been earned in periods that do not exceed 52 weeks. And that 1073A only applies to pensioners. And so if you're allowed, say that a pensioner has earned or derived or received income over a period up to 52 weeks, but there's not a tailored provision or a tailored law that allows that attribution of income up to a period of 52 weeks to be done in respect of non-pensioners, then it would make sense that the daily attribution test doesn't apply to pensioners because they've already got their own rule up here that allows an attribution to occur in terms of saying to a pensioner, you earned this much money up to a period of 52 weeks, tailored to those people through a 1073A attribution rule. The 1073B attribution rule applies to non-pensioners. That's what subsection 2 says. Subsection 1 does not apply to pensioners to the extent that it relates to the benefit of a pension. And so this is a rule applicable only to non-pensioners, okay? And then, of course, that interacts with what a pension age means and blah, blah, blah. But that's the general effect of subsection 2. Now, there are some oddities here because it includes 1073A here at subsection 1D, which might confuse matters, but I won't go there. We don't need to. Let's assume the law is coherent and that it is possible for 1073A to be used within the context of 1073B, notwithstanding the 1073B2 carve out for pensioners. Now, going back to our Ombudsman's report, I hope you didn't mind that detour into the Social Security Act 1073B, which was quite detailed, but it's not the end of the detail, but it gives you the basic operations of this daily attribution rule, which the Ombudsman is trying to describe. Okay, so it's in this paragraph that the Ombudsman describes that daily attribution rule. Moving on from the daily attribution rule now, the Ombudsman report says that prior to 7 December 2020, Centrelink customers generally reported all income they earned in a Centrelink fortnight. Okay, earned is when the customer worked. Services Australia had an earnings worksheet to assist customers to report income they earned in each Centrelink fortnight. Now, it's interesting because if you look up these earnings worksheets, one exists at the moment. It's like it's called a SU505. And so if you look at that, whoops, I'll pull that over to the right screen. You can see it's a kind of earnings worksheet. It's got instructions and so forth, right? But I think this came into being after the 2020 provision. So it's probably not that worksheet. That was the one they refer to. They talk about a historical worksheet, But there are references in different places to this worksheet. For example, in the Senate Community Affairs Legislation Committee additional budget estimates Senate committee hearings back in 2012, there were questions put to the Human Services portfolio, and by probably one of my favourite political representatives in history, the Green Senator Rachel Siewert, who was just an incredible welfare law policy advocate. So Senator Siewert asked a series of questions which the Human Services portfolio took on notice. And one of those questions, they all relate to income receipts and how income is reported and the like, different allowances, New Start allowance, youth allowance, parenting payment, etc. One of the questions was about, the current reporting requirements, whether there was flexibility within them for those who were undertaking part-time or casual work, etc. Now, the response on notice that the Human Services portfolio gave, this is back in 2012, noted that customers with variable employment income, including part-time and casual, are required to report their employment income and other changes to their circumstances on a 2-weekly basis. What an unfortunate expression. That has to mean fortnightly basis. They probably should have had a hyphen there, so it's like 2 weekly, like it's a compound noun or a compound adjective. 2 weekly being the adjective that modifies the noun basis there. But that's right, grammatically. But they mean once every fortnight, not twice a week, I think. I'm sure. So, and it also gave this interesting fact apparently here, that customers are able to change their reporting date to coincide with their employment. I didn't know about that. I've never seen that option, but apparently they were able to do that, which would have potentially solved a lot of issues, potentially, because as we'll see, part of the issue here is that your entitlement period, or as the legislation, as I say, calls it, the instalment period, which is the Centrelink fortnight, being disaligned to your payslip fortnight, creates a problem. So if you were able to start the entitlement period, or the Centrelink fortnight period, and you were able to align that with your payslip period by changing the Centrelink period, that might have helped you report more accurately and avoided any disalignment, which leads to this apportionment problem and I'll get into that in a minute. But that's not why I brought viewers to this sheet. The reason I brought them here is because, notably in the answer G given to question G, it says that customers are able to report their employment income via a number of different methods, including online or phone self-service, in writing or in person. Customers are encouraged to keep their own record of their hours worked and employment income so that their payment is not delayed while waiting for this information from their employer. Finally, it said employment worksheets are available to help customers report the right details. And then it says there are several publications available to customers to help them correctly declare their earnings. It names two. First, reporting your earnings, what you need to know. This publication provides advice on what to report, when to report, and how. Now, I haven't looked for those. They might be on Internet Archive. They might be somewhere on the internet. The second one is report your earnings. Worksheets. It says this booklet is to help customers record and report their gross employment income, gross, which is what was required. These worksheets do not need to be handed into the department. They're just little worksheets that enable you to work it out. If there is more than one employee during a reporting period, a worksheet can be used for each employer. It does say payslips by themselves would not be sufficient for a customer to meet their requirements. Customers are required to establish entitlement to payment on an ongoing basis by answering relevant questions such as details of income earned and or received during the reporting period. That reflects the language of the law, particularly what we've looked at already, which is the 1073B provision, which talks about earns, derives, or receives. Okay? That here it doesn't say derives, it just says earned and or received. If it really wanted to be if it really wanted to be faithful to the law, it would have said earned, derived, and or received during the reporting period. But the problem one of the problems, as we'll see, is that having these different things, earning, derived or received, has created a problem. That's my opinion, and we'll see, and I'll explain it. But anyway, the substance of the answer here, which is separate answer H, is that customers are required to establish entitlement to payment on an ongoing basis by providing answers to questions about their income which was earned or received during the reporting period. And it notes the problem. The period covered by the payslip, which I've been calling the payslip period, may be different to the customer's reporting period, which is otherwise known as the entitlement period or the Centrelink fortnight, or in the strict language of the provision we looked at, the instalment period, during which the Centrelink monies are installed into the bank account of the Centrelink recipient in accordance with the Social Security Act. Okay, so the long and short of taking you to this Senate committee answers on notice, to questions on notice, is to just say, yeah, the Ombo is correct, that there were earnings worksheets available to assist customers to report income they earned in each Centrelink fortnight. But clearly, let's be honest, all of these worksheets and all of these like modes of assistance were there to kind of manage a problem. Why would they exist otherwise? And the problem is that Centrelink periods or Centrelink fortnights do not align with payslip fortnights, and therefore you've got to work out, how much income to report. Okay, and I think you get the gist, but I'll leave it at that at the moment in the interest of moving on. But we will come to the detail later. And in fact, it comes right to the point now. As the Ombo notes, in some cases, it was difficult for the customer or Centrelink to determine when income was earned, okay, for the purposes of their obligations. This could be where, 1, payslips did not show the hours or days worked or the different hourly rates of pay, okay? Now, if you had a payslip that did not show the hours or days worked, on the assumption that that payslip was a fortnightly payslip, it might just say $210 was earned this fortnight. And it doesn't tell you when the days were worked. So it doesn't say it was earned on Monday, Tuesday, Wednesday, Thursday. None of that. It just says 210. It doesn't either show you the hours worked. So it doesn't say that the $210 was for 2 hours work, which would mean you paid $105 an hour. It doesn't say it was for 10 hours work, which means you were paid $21 an hour. So there's no way of knowing how or when it was earned. And that lack of information, you could draw inferences if some of that was there. For example, if it said that your rate of pay was $21 an hour and you worked 10 hours, arguably you could have worked a 10-hour shift and earned it all in one day. Or you could have worked 2 5-hour shifts and earned it in 2 days. They are inferences. It would be unlikely if your rate of pay was $21 an hour, I suppose, that you would have worked, every day, so that you were putting in, 14 divided by, whatever it is to get you $210. But they're just inferences. And the reality is that pay slips might not have shown the hours worked or the days worked. In fact, it only showed $210. In addition, it didn't show different rates of pay. So you didn't have Sunday rate or normal rate. You just have 210, and that's all there is. Now that's a problem. Firstly, because the employee, the person who has to report, might not themselves have knowledge of how that amount was worked out. For example, in casual work, you might not always know the penalty rates that were applied to the hours of work that you did. And you might not always be able to calculate them in a reverse engineering style to work out how much penalty rate was part of the 210 and how much wasn't. So you don't actually know when the income was earned either on the basis of the payslip alone. And you might have to go to your accountant in a workplace and say, could you give me all of that detail? Which is quite a lot of work for someone who might work casually and might not even have contact with the accountant, the bookkeeper, because they're in and out. Okay, so that's the first problem. It's also hard for Centrelink, for the reasons I've stated, to make inferences about when the money was earned. Okay, and earned is, as we saw, part of the language of the statute. Although the statute gives you options, it says, sorry, I'll just go to it again, that the daily rate may be worked out when a person earns, derives, or receives money. The person is taken to earn, derive, or receive money on each day. So it doesn't matter on the language of the statute whether Centrelink or the customer says that they earned it, derived it, or received it. Each of those ways of characterizing the income, it was earned on this day, or it was derived on this day, or it was received on this day, would fulfill the requirements of 1073B. Okay, so technically, a person reporting the income that they received would be meeting the terms of the statute. Whether or not another piece of material that Centrelink provided the customer said, tell us when you earned the income or not, that's a different kind of request. The actual legal provision enables Centrelink to attribute income on a daily basis to the customer, even in circumstances where the customer has only provided information about when they received the income. Okay, so in my opinion, the statute is kind of indifferent to whether or not, or to whether Centrelink thinks about the income being earned, derived, or received on any one day. It will, in all of those instances, allow Centrelink to attribute the income on a daily basis, okay? But as we'll see, and this is important, Centrelink only chose one way of analysing and calculating kind of how people received income and doing the daily attribution that allows them to understand and attribute income earnings to a person. And that was on the when earned basis, okay? The person earns. They forgot or dismissed derives or receives, and I'll give you some reasoning for why they made that choice. But beyond what the legislative provision provides, there was a so-called policy decision within the agencies to say, well, we're just going to preferentially say we like doing it when a person earns it. And there were virtuous, seemingly, reasons for taking this approach. But it's important to put it in the legislative context and say that the law didn't require them to take that earned approach. It was more flexible, okay? And when you think about it, Senator Seaworth's question here about what flexibility is there within current reporting requirements for customers undertaking part-time casual work to adjust reporting periods. Now, that only referred to adjusting the reporting periods. But the question goes to a point about flexibility. And if you said, what flexibility is there within current reporting requirements to allow a customer to report the money they received in their bank account, as opposed to reporting the money when they earned it, i.e. the day it was recorded on their payslip, potentially as being earned? Well, Centrelink would have said, well, we don't want to give customers much flexibility there. What we want customers to do is report it as earned. But I'm getting ahead of myself there, but I hope that it's starting to make sense. And that is why, because earned is such a big deal in this problem, that is why the Ombudsman here gives us the definition of earned. Earned is when a customer worked, not when they got the money in the bank account, not when they received the pay slip and were able to report it. It's when the day that they made the money, and that it was kind of, written down as money to be paid to them at a future time. Now, I've already discussed the difficulty that a customer in Centrelink would have when a payslip doesn't record the hours or days worked or the hourly rates of pay. And that is because with that lack of information, you couldn't say when the income was earned, could you? You could possibly say what income was received, and you could possibly say when it was received. And you could go to a bank statement to see when it was received. But you could not infer from a payslip, as a matter of fact. I mean, you could make an inference it's possible, but you couldn't reliably make an inference in circumstances where a payslip didn't record hours or days worked, an inference about when the income was earned, not reliably. And the second problem is that it was difficult for the customer or Centrelink to determine when income was earned when, to the working period, i.e. the period in which they made money, i.e. the payslip period, did not align with the Centrelink fortnight, i.e. the entitlement fortnight, i.e. on the terms of the legislation, the instalment period. Okay, so I've already discussed that problem, but we're going to see some diagrams as we move on relating to it. So these are the two issues in terms of calculating when money was earned by a customer that arises when they're trying to apply Section 1073B. In these cases, Services Australia adopted a practice of apportioning or spreading employment income across the payslip period instead of within the one Centrelink fortnight. Now that's a pretty dense sentence, pregnant with meaning when we think about all that we've learnt so far about the section 1073B, because even on my initial reading, and I hope you're following this, you can see I'm a law teacher the way I'm talking. The way that the 1073B provision is drafted, it only enables Centrelink to calculate income being that is earned, derived, or received on each day in that instalment period by the number of days in that instalment period. So, but what it seems, according to the Ombudsman, was happening was rather than reducing the $210 to a daily rate of $15 and then multiplying that by the number of days in the instalment period, it was multiplying that by the payslip period, which would have taken, if the payslip period is disaligned, would have taken some days out of the instalment period, firstly, okay, if they're disaligned. That's the second problem. But on the first problem, if the payslip period was a longer period than a fortnight, which often happens, some people are paid, on a monthly basis, and some people are paid when they request it. You could say, you could work for 6 weeks and then say, oh, could you pay me now? Because I've earned enough money to make it worth the administration, because you're only working a very small number of hours each shift over the 6 weeks. And you finally, after requesting the accountant and your employer to pay you, get a pay slip, and it just states the start date of your work and the end date of your work, and say, for example, the total number of days worked or the total amount of time representing that payslip period is, 60 days, roughly 2 months, then what would happen is Centrelink would reduce it to a daily rate pursuant to 1073B, but rather than multiplying the income by, for the 2 months by the number of days in the instalment period, which would have been 14 days, it multiplied the amount of income on the payslip after reducing it to a daily rate by the number of days in the payslip period, which in my example is 60 days, which meant that it reduced that daily rate to a lower figure, okay? So we're going to come to some examples visually soon, which will explain this in more detail. Now, I think we can already see, though, that the legislative provision only enables Centrelink, on my reading, to divide the total amount of the employment income which would have been for a particular fortnight disaligned with the instalment period, or a different period of time, maybe not 14 days, than the instalment period, by the number of days in the period, which, as I've said, refers to the instalment period. Therefore, it was only permissible that they multiply it by the 14 days in that instalment period. Okay? Again, my definition or my reading of period is it must mean instalment period. There's no other reference to another period, only to income. You're doing maths, which is employment income, versus time, which is instalment period. You can't suddenly say, oh, it meant the employment income period, because no temporal aspect to the language of employment income has ever been used in the provision up until now. But I can imagine there are arguments, oh, that period can mean anything. Can't mean anything. It must mean something. And what does it mean? It must mean the best meaning. Okay? And what's the best meaning? That's the question. In my opinion, it's an easy question. Now, apportioning income across... Now, so moving on to the next sentence. This meant income could be apportioned across 2 or more Centrelink fortnights. Okay? This was not permitted by Section 1073B of the Social Security Act as it was enforced prior to 7 December 2020. We know what 1073B says. Even though we might be budding lawyers and not even that, I hope that we can see now that this sentence, with great respect, is a gloss on 1073B. When I say gloss, I mean it's an interpretation of 1073B. I happen to think it's correct, but the Ombudsman is saying this was not permitted. My understanding of what's being said here, although not explicitly, is that the word period used at the end of the section of 1073B in that paragraph D refers to the instalment period. And because you could not attribute income beyond the instalment period, because the language of the Act says number of days in the period, remember those number of days being 14 in almost all cases, and it doesn't say number of days in multiple instalment periods, or it doesn't say by the number of days in the employment income period, because it just doesn't say that, and it couldn't mean that, as I've already argued. You end up with there being no permission for Centrelink to apportion the income across anything more than that period, which is the instalment period, which is usually 14 days. Well done, Ombudsman. I think you're right. You obviously think you're right. I hope that you're right for the same reasons I think you're right. But that's mere vanity, and my view of the law has been what is expressed. If I'm wrong, we'll see. Portioning income across multiple Centrelink fortnights wasn't only, therefore, not permitted, it also caused problems with calculations, as customers could be over or underpaid if employment income were apportioned into Centrelink fortnights when it was not earned, derived, or received. Okay? Now, this takes us into a whole new territory, because we can see by doing something that was not permitted by the section, you actually bring about far more difficult challenges, in the sense that the wrong calculations create the wrong, create debts that are incorrect, but it also creates, you know, mutatis mutandis, payments, overpayments, which is just another way of saying, you know, incorrect payments, as well as underpayments. Okay? Because if, for example, you're only allowed by Section 1073B to use that daily attribution rule in respect of one instalment period, one fortnight, so that the person who had the 2 months pay slip must be said to have earned the money by law, or received the money by law, only within one instalment period, 1 2-week period, that means that the other fortnights in the pay slip period, and in this case, there would be 3 other fortnights over a 2-month period. The 2-month period contains 4 fortnights, 2 fortnights a month. If you're only allowed over the 4-month period, over the 4 fortnight period, to say that the income was earned in one instalment period, one fortnight, then you've got 3 other fortnights where 0 income is earned. And the person will be entitled to their income from Centrelink, rather. They're entitled to their Centrelink benefits in those 3 other fortnights. But what Centrelink would have done is use that daily attribution rule to reduce it to, a period, a daily rate, and then they would have apportioned the income across the whole 2 months, across the whole 4 fortnights, so that it was evenly earned over those 4 fortnights, which would have reduced the rate of entitlement to Centrelink payments evenly across the 4 fortnights. Okay, and that is why an underpayment would be possible, or potentially a debt, if the person reported late or something, would be wrong too, because when Centrelink discovered through the calculator that the person was overpaid, for example, for those 4 fortnights, in reality, if they followed the Section 1073B rule, they wouldn't have been overpaid for those 4 fortnights, only 1. And therefore, any debt calculated on the basis that they were overpaid on the 4 fortnights would be erroneous. So not only do you have a problem in terms of unlawful calculations being made, but you also have the problem of underpayments and overpayments being created. But even though they seem like opposites, overpayments and underpayments being wrong here, they all end up, the errors all end up, it seems to me, as a problem to Centrelink. Because Centrelink will have either underpaid a customer by this process, which means they now have to go and pay them back, or if they have overpaid a customer and the debts have been repaid, they now have to repay those wrongful debts. So for both overpayments and underpayments, Centrelink has to repay money to the customer, presuming all these historical debts have been repaid. We know that 13,000 of them are on hold, potentially. But for the other 87,000 mentioned in the report, whether they're underpayments or overpayments, they're going to be on the debt side of the ledger at the Centrelink office and on the asset side of the ledger in terms of the Centrelink customer affected. Moving on. Apportioning income across multiple Centrelink fortnights caused problems with calculations, as we saw. Now, helpfully here, the appendix to the Ombudsman report gives us an example of apportionment. And it says the example below shows a job seeker customer who is a casual worker with highly variable shifts. Their employer issues fortnightly pay slips that do not line up with their Centrelink fortnight. In the example below, the customer earned $1,120 in the first Centrelink fortnight and only $280 in the second. Now, this is quite a discrepancy, but it wouldn't have been unheard of at all for casual workers. In fact, a lot of the time, especially for university students and so forth, they would, in any 2 fortnight period, a month, could earn $3,000 in one fortnight where they're working full time with penalty rates, which was the first fortnight of university holidays. Whereas in the previous fortnight, they earned $0 because they were at university during the exam period and worked no shifts. So this up and down is often exaggerated. High, low, high, low. Regardless, just on the maths here, if a customer earned $1,120 in the first Centrelink fortnight and $280 in the second, and assuming that the customer did not get any employment income in days 1 to 7 and 22 to 28 because they only worked shifts, sporadically, and as a third assumption, the payslip only shows the total amount earned over the 14 days, like the one we saw above, where your employer just issues you a payslip, doesn't have the hours, doesn't have the day, doesn't have the rate. It just says $1,400. Now, this may sound bizarre, and it kind of is bizarre now, since we've got touch payroll, which automatically updates all the government agencies are single touch payroll of income details. But historically, this wasn't unusual at all. And in fact, in some instances, pay slips weren't even, computer generated. They were kind of written, and then you might get one of those old carbon copies, and so forth. So say that pay slip only recorded the amount of income rather than the hours or days worked. And then you've got this pictorial, which is really helpful. This pictorial illustration of the situation. Here's Centrelink Fortnight 1, which is in terms of the legislation, it's the instalment period. Okay, it's 14 days, the instalment period 1, and here's instalment period 2. The actual earning dates are the 8th day of the first instalment period, the 9th day, the 11th and 13th day, and then only 1 day of the second instalment period, 280. Now you tally that up, and they clearly earned 1120 over this first fortnight and 280 over this second fortnight. Okay. Now you can tell what Centrelink will do. It will reduce the total, which is $1,400, to a daily rate. Okay. And it will then multiply that daily rate by not 14, which it is entitled to do. It's entitled divide the total amount of the employment income, which is $1,400, by the number of days in the installment period, which is 14. Instead, it multiplies the income, $1,400, over 2 installment periods, which is 28. And so figure 4 shows this. It shows what happens when Services Australia would apportion income in line with the payslip dates and across 2 Centrelink fortnights, 2 instalment periods, rather than within the instalment period, number of days in the instalment period. Let's go back to the section. By the number of days in the period. Okay, it's more than the number of days in the period. It's 28 days. So in this case, Services Australia divided the 1,400 by the 14 days in the payslip period, thereby coming to a daily rate of $100. Okay, because 1,400 divided by 14 is 100. This is now known to be unlawful, not the division itself, but the apportionment, or better put, the attribution of income across the 2 periods. Now, I said they might do it across 28 days. They didn't. They did it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. They did do it over 14 days. But what they unlawfully did is they attributed it to days beyond the period, the installment period. Okay? And amount of employment income worked out by dividing the total amount of the employment income referred to in paragraph D by the number of days in the period, and then it attributes that amount to a different period. That is a problem, clearly, because the Act says by the number of days in the period. And then you're attributing it to you're meant to take a turn to derive or receive on each day in the instalment period. So this actually, as a matter of construction, is more complicated than I put it in terms of this end paragraph where you got in the period. The other element to the construction problem is that the person is taken to earn, derive, or receive on each day in that instalment period. You're attributing it to days beyond that instalment period, aren't you? So that's unlawful. There's nothing that says you can attribute income based on this daily attribution rule, allowing Centrelink to take the person to have earned, derived, or received it on a day outside that instalment period. It only allows the person to be taken to have earned, derived, or received on each day in that instalment period, the particular instalment period, within which the whole or part of it, the person earned, derived, or received the income. It all hangs together, doesn't it? See, for a moment there I was like, hang on, but it hangs together, and coherently it is still the same meaning. You're attributing it unlawfully because you're saying that you can say the person earned, derived, or received on a day outside the instalment period, when this subsection only allows you to conclude that they earned, derived, or received it on a day in the instalment period. I know it gets down to the kind of text grapheme level, but it is, I mean, from the graphemic or the kind of like syntactic, well, it's not syntactic, but the textual units, these little graphemes, out of these words comes not just a textual analysis that enables you to say that is contrary to the text, but within the words you can read and make a kind of orthodox inference of parliamentary intention. And the parliamentary intention was that, in my humble opinion, the instalment period was that a person could be deemed to have earned, which it uses the word taken here, money within the instalment period, within which they earned it. They can't be deemed or taken to have earned or derived or received money outside of that instalment period, because that is not written in the law here. But that's what was done. Okay, that's what was done. Now, figure 5, which follows, shows the lawful apportionment of income, which means it gives us an example of the way in which Centrelink could have done it if they had been apprised or advised of this problem earlier. And it makes a lot more sense, okay? In this example, the one that follows, income has been accurately calculated and apportioned within the Centrelink fortnight within which it was earned. So you can read in the Ombudsman's report here, even though it's a fairly high-level description of the operations of the 1037B, what lawfulness looks like and what unlawfulness looks like. Unlawfulness is defined by, income being apportioned across instalment periods. Lawfulness looks like income being apportioned within instalment periods. Okay? And so what you end up with here is an apportionment within the 14-day instalment period of a still mathematically fictional and untrue daily rate of $80. But there was never any doubt that Centrelink was enabled by 1073B to create a daily rate of attribution. That's what it does here. But it does it within the instalment period as required by the person who's taken to earn, derive, or receive on each day in the instalment period. So it does it within the instalment period there, and it's $80 when it does it there per day. And then it's $20 per day when it does it here. The total is $280 there, the total is $1120 there. And you know what happens when you have this calculation? Well, the person earned $280 here, so they're entitled to Centrelink payments because $280 is quite a low income for 14 days. But they probably won't be entitled to Centrelink payments here because $1,120 is not a low income for 14 days. But what would it be here? $100, $200, $300, $400, $500, $600, $700 on that fortnight, and $100, $200, $300, $400, $500, $600, $700 on that fortnight. Say the threshold at which your Centrelink entitlements reduced to zero was $500. Your Centrelink payments would be zero for both fortnights here when it was apportioned in this way across 2 fortnights. So ex hypothesi, in other words, hypothetically, you get $0 for this fortnight from Centrelink, and you get $0 for this fortnight from Centrelink because you've earned $700 in each, and that's enough to knock you out of entitlement. On the other hand, using the same threshold of $700, you would be knocked out for this first fortnight and your entitlements would reduce to zero, but you would be entitled to Centrelink payments on this fortnight because your income is only $280 and you're nowhere near the $700 threshold. And so the difference has ramifications, and that's why people will have either been underpaid or overpaid. And when they've been overpaid, for example, if they were paid a benefit in this fortnight, but on the proper calculation, they would have been knocked out, they've also repaid a debt here. That debt might turn out to be not legitimate and may need to be repaid to them. Okay? I suppose it's possible that people might have also underpaid debts to Centrelink, but I was talking about this, not talking about this directly, but someone mentioned the other day as well that any debts that were deemed irrevocable at law, I think that was the wording, or irretrievable at law, or irrecoverable, that's the wording, I apologise. Any debts that were deemed irrecoverable at law prior to 2017, when I think they amended the Act and said from now on, prospectively, there would be no time limit, no statutory bar on the time at which back in time Centrelink could recover debts, then they would not be recoverable if they had already been deemed irrecoverable at law before 2017. So that's a bit of a wrinkle. If anyone owes money to Centrelink, and I didn't think they could, but maybe they can, after any recalculation process occurs, those debts might not be recoverable anyway if they have been already deemed irrecoverable at law. The question then becomes, and I haven't looked into it, what's deemed irrecoverable at law? It could mean, and I looked up in the Act, the word irrecoverable at law is only used once or twice, and it seems to be where it's been waived by the Secretary, or it could have been waived by the Secretary under direction of the AAT or something. So if any debts have been waived, but through a process of recalculation based on this apportionment issue, they re-emerge or are kind of increased, arguably, if they've already been deemed irrecoverable pre-recalculation, they couldn't be made recoverable post-recalculation. That's an hypothesis. Okay? Now, as it goes on, it says, while these calculations may not involve significant changes to Social Security entitlement rates in any one Centrelink fortnight, over time the amounts could become significant, particularly because the customers are reliant upon Social Security benefits or pensions in addition to any employment income. So all it's saying here is that when you look at these pictorial examples, you're like, oh, okay, so they might have missed a fortnight or two. No, this could go on for years. A person could be on Centrelink from 2003 to 2017, and this could happen prospectively every fortnight, meaning that there could be, 15 years plus of unlawful apportionment that needs to be recalculated. And there may be some extreme cases in which the apportionment has resulted in significant underpayments. Okay? The law allowed Centrelink, as we've already seen, to apportion income across Centrelink fortnights when people worked regular hours and received regular amounts of income. Well, that's interesting. I haven't actually looked into that. However, where income was not dependably regular, Centrelink should not have apportioned income across multiple Centrelink fortnights, and to do so was unlawful. So, as I said at the start of the video, this is my opinion of the law, and it's not an authorised opinion, as might be issued by a court or issued by an authority like the Ombudsman. I mean, I am commenting on the Ombudsman's finding, and I'm speculating on the reasons why the Ombudsman has come to this finding. After all, we do not have legal reasons given here, like a court will give, nor like the AAT will give, nor like the Solicitor General will give. And so I'm just using my skills, such as they are, as a legal academic to kind of speculate on why this may or may not be lawful. I think I've been, relatively careful throughout this video to note that this could be right, could be wrong, etc. But one gets the sense occasionally that they're not fully informed of every detail, and I get the sense that I'm not fully informed of what the Ombudsman is identifying or is thinking when the report makes this note, because it draws a distinction here between lawfulness with respect to those who worked regular hours versus those who didn't. And within the 1073B context, I don't see any such distinction, because it merely allows a daily attribution to occur where a person earns, derives, or receives money in the whole or part of a particular instalment period. Now, from 7 December onwards, a change to the law meant Services Australia assessed income only in the fortnight paid, instead of the period in which it was earned, derived, or received. And so the Ombudsman says that its investigation only considers how the unlawful practice of apportioning earned, derived, or received income, as it's expressed in the daily attribution rule, affects debts which accrued, or which, better put, were alleged to have accrued prior to the legislative changes that occurred on 7 December 2020. Okay, so that is the appendix, which gives you the explanation of why the Ombudsman claims that Section 1073B does not permit lawfully the spreading, as it's called, or apportionment of income across instalment periods, to use the language of the statute, or Centrelink fortnights, to use the language of the Ombudsman's report. But there is something not explained, okay? And it's not the Ombudsman's omission. There's another dimension to this that I want to flesh out for viewers, because it's kind of, some of you may already have this question. The question is, if Centrelink had the option to work out the daily attribution in terms of when the income was earned, derived, or received, why could they not use received, which might mean the fortnight within which it went into the bank account, which would presumably be very close to the payslip issuance fortnight, if not the same fortnight of the payslip issuance? That'd be a fairer bet, wouldn't it? If you were trying to work out how to apply 1073B within the context of calculating debts, and a person turned up with a payslip only, and you, on a kind of strict reading of 1073B, discerned that you could only attribute, a daily rate to days within the instalment period, that is a fortnight, within some broader period of 60 days, which fortnight would you choose from the four comprising the 60 days to use as the nominal instalment period within which you take the person to have received the income on each day? You would choose, I think, the fortnight closest to the payslip date itself, because it's a fair bet that the payslip was issued in the same fortnight that the person received the income. So given that Centrelink had the wherewithal to kind of minimize the risk of getting the fortnight wrong, of course, just as an aside, it seemed not to know that spreading across fortnights was wrong and unlawful. But suppose they knew, and suppose they then were still faced with the dilemma of having to choose a fortnight to attribute the daily rate of income within for each of the 14 days within that fortnight, that single instalment period. Which one would you choose? That dilemma doesn't go away, even if you're informed of the unlawfulness of spreading across multiple fortnights. But that dilemma could be resolved if you just use kind of an Occam's razor to say, oh, well, received is going to be close to the payslip, and so we're going to say the payslip fortnight is, you know, the payslip was received on 1 January, and the instalment period, the Centrelink fortnight, running from, you know, 28 December until whatever, is going to be the instalment fortnight within which we attribute a daily rate of income across each 14 days. I reckon if they did that, they would have had a pretty good system, and they would have avoided this problem. The reason they didn't do that, however, is very interesting. And it gels with what I was saying earlier. They didn't use the received option, and they didn't seem to use the derived option, although I'm not sure earned or derived and received. I'm not sure how derived is contradistinctive to these others, and it's of no moment because the real one is earned versus received. But they preferred earned. Why did they prefer earned? Okay, now when they made the amendment in 2020, as with all legal amendments, the departments, you know, responsible for the legal act that's being amended has to propose the amendment, and the minister of the relevant department will, you know, read the bill, and there'll be a second reading speech, etc. But even before the second reading bill speech is read, there will be a kind of different to the explanatory memorandum as well. There will be, in many cases, a very helpful document created, which is called a Bill's Digest. And the people who create or draft these Bill's Digest or Bill Digests are usually, unexceptionally, very good researchers. They often have PhDs, or they might have, you know, highly, skilled research CVs, having written, books in specialty texts and so forth. And there was a Bill Digest written for the amendment that removed this problem putatively removed this problem in 2020. And that Bill Digest contains an explanation as to why historically the preference was contains an explanation why Centrelink preferred earned over these other options. Okay, and I'm just going to pause the video and find that Bill Digest to analyze. So the Bill's Digest is here, and as you can see, in 2020, the amendment to the Social Security Act was titled Social Services and Other Legislation Amendment, bracket, simplifying income reporting and other measures, close bracket, Bill 2020. Now, from the title of that bill, you know what it's going to be about. It's about simplifying income reporting. And as you would imagine, and as you've already gathered from the words of the Ombudsman's report, the bill gets rid of our section 1073B. So it totally gets rid of this issue. And as the Ombudsman report says at the bottom here, a change of the law meant Services Australia now assesses income only in the fortnight it is paid instead of earned, derived or received. So this whole attribution employment income rule is repealed under this proposed legislation amendment proposed in 24 Feb 2020 and around that point. And when it passes, this section disappears. It's repealed and replaced. And if I just search for that section, for example, 1073B in this Bill Digest, it talks about a new section 1073B. The whole Bill Digest explains and explores the problem of this earned and derived and received option that 1073B presents, and the problem that arises in terms of when does a person have an obligation to report? Is it when they earn the income, receive the income, and the flow-on effects in relation to calculating debts and the apportionment problems that arise from Centrelink preferring earned over received. As I mentioned earlier, they could have avoided a lot of this thing by just, saying it was received and apportioning it only in the fortnight closest to the payslip. Might not have always been correct, but would have been arguably more likely correct than trying to apportion it across a whole period, of different fortnights around the a presumed earning period. Now look at this. When you look at the Ombudsman's report, you might think, oh, why didn't they know? Why did they change the law in 2020 if they didn't know? And the same problems, even before they officially said it was unlawful anywhere to do otherwise, or the apportionment issues that arose from the earning model were officially stated by any government agency, such as the Ombudsman, there were clearly problems with the earning report model. And that's why they went to a paid report model. And you can see here a person earned, and they report 150, report 250, report 100. Here they are paid when they report when they're paid. They report 100, report 225, report 175. You can go through this and see the differences. The Bill Digest explains it all. But the important thing I wanted to clarify was this. Why did Centrelink, even though the statute provided Centrelink with options, it said you can create a daily attribution rate under this rule, either on the basis of a person's employment income, being earned, derived, or received when it comes to attributing it to a daily rate of an instalment period and one instalment period only of your choosing. And so why did they pick earned, which seems to have set them up for failure? Because as soon as you pick earned, you're getting further away from the payslip, and you're going to select arguably the wrong fortnight. But even if you selected the wrong fortnight, it still might not have been a problem. But it took you further away from selecting only one fortnight, which is really what was required. So why did they pick earned? It's explained here, and it's just golden. Okay? Rationale for current assessment process. Now, the current assessment/apportionment process is really set out in 1073B as a prescriptive method of attributing income. It says you have to do it this way. But of course, Centrelink aren't, kind of faithful adherents to the law as written. Centrelink creates its own internal systems and tools and policies, and it attempts to reproduce methods of, administering the law that are consistent with the law. And I make no aspersion whatsoever on Centrelink here or any other actor associated with any agency, saying that they didn't seek to comply with the 1073B provision. However, within the 1073B provision, there are choices. Blame the drafter, or blame the minister who oversaw the amendment to the act that introduced 1073B, who is responsible for the bill and law being enacted as written by the drafter, by the legislature, or legislative council, etc. So because they let Centrelink make a choice here, earn, derive, or receive. Why did they pick earn? Well, that's explained in the Bill Digest under rationale for the current assessment process. It says, the rationale for the current arrangements is explained in the Department of Social Services Social Security Guide, which is a kind of, it's a soft law instrument that sits below the Social Security Act, below the Administration Act, the Social Security Administration Act, and below any regulation or delegated legislation, and it's an internal guide. Quote, as a matter of policy, income test assessment is generally based on whichever event occurs first, which is usually when people earn the money. This is because assessing earnings only when received would create inequities as it would enable some people to defer receiving their earnings until the income would have less impact on their income support entitlement. This would place people who can defer receipt of income in a better financial position than those paid on a regular basis. There's a lot of issues with this. The first is that obviously people who earn income on a regular basis don't necessarily earn a regular income. But let's just put that to one side, because we can see that they mean regular basis as in they earn money fortnightly, as opposed to a big amount of money at the end of the month, or a big amount of money twice a year. Because as Stuart Robert, the former minister, said at one point in the Robodebt Royal Commission, a person could earn $1 million in the last fortnight of a 26 fortnight year and be entitled to Centrelink payments for the other 25 fortnights of the year. And that is true. That example was an unusual thing to bring to our attention, because it seemed to suggest that apportionment outside the entitlement period, that last fortnight, was justified on the basis that a person might be entitled to Centrelink payments when they're $1 million earner over the annual taxation year. But I mean, unless you change the law to say that if you earn this much money a year, you can't get any Centrelink, then the justification is just a thought bubble. The law did not permit apportionment, as we saw in Robodebt, to extend across a year. And all this Ombudsman report really says is that it doesn't allow apportionment to extend beyond any instalment period, which is usually a fortnight. So not only can you not take the ATO amount and apportion it across 26 fortnights, you can't take a pay slip, which might be a monthly pay slip, and apportion it across 2 fortnights. You can only apportion income based on this daily rate attribution rule to a single entitlement period, which happens most commonly to be a fortnight. Now, when you read 1073B, it gave the options of earned, derived, or received, but social security agencies and Centrelink just always did it on an earned basis, because if you did it on a received basis, like I suggested, would have been better earlier, because then you can choose the received money. One, because you can assume that it was received within the right entitlement period by inferring that from the entitlement period closest to the pay slip. But another way you could have done it, if you wanted the absolute gold standard of evidentiary proof as to when money is received, is you could have asked for the bank records of the customer, who could have given you them, or you could have ordered them if you were Centrelink and looked at the bank records and said, that's when it was received. Now, fair enough, you might only have the net receipt in the bank records, the after-tax amount, whereas the pay slip would give you the gross amount. But you could, if you had the pay slip and the net and the bank receipt, clearly see when it was received. And with that information, you'd be well equipped to say, okay, we're going to reduce that amount to a daily rate. We are going to apportion it over the number of days in the entitlement period or the installment period, which are 14 days most commonly. And we're going to say that they received it in the installment period within which they actually did receive it, and we're allowed lawfully to apportion it on a daily basis across the 14 days of that installment period. And therefore we reduce the Centrelink payments and entitlements that person legally is owed in accordance with that receipt of income, that receipt of employment income. But that didn't happen because they preferred the earned model. And the reason for that, as virtuous as it is because Centrelink said, well, if people elect or put themselves in a position to earn money, to receive money in lump sums, they'll get the benefit of the Stuart problem, the Minister Stuart Robert problem, which is a benefit where, arguably on the basis of this policy, that a person could be entitled to Centrelink payments over multiple fortnights and then earn a lot of money in one fortnight, the received fortnight, and be disentitled only for that narrow entitlement period and remain. So, I mean, that is the issue underlying the policy preference that led, in my opinion, maybe not as a kind of straightforward causative chain, but gave context to the way in which Section 1073B was applied, and perhaps blinkered the agencies to the actual operation of the law on its terms. Okay? So now that's it. I've said all I wanted to say. It's another almost 2-hour video. This time I don't make an apology for it being long, because I never said throughout this video that it would be quick like I did in my last one. But that's it. Now, obviously this video contains some speculation as to the meaning of the law and the meaning of the relevant provision, but I'm not speculating on the basis of no authority. I am attempting, in the absence of any other published explanation, to explain what may be meant by the Ombudsman, who says in its report, Lessons in Lawfulness, that apportionment beyond instalment periods, to use the language of the legislation, is unlawful. So this is not any form of legal instruction or advice. It's merely an academic commentary on the one way in which unlawfulness may be understood or gleaned from what the Ombudsman avers in this report. All right, so thanks very much, and we'll see you next time. Ciao.